Hello, everyone. Welcome to howtotrade.com. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. Today, we've got a lot to go over. Really a whipsaw, compressed session, not really too uncommon, especially when we're going ahead of NFP. We had just an epic move in WTI crude oil this morning. If you got long and caught it, I mean, you made a fortune. It seems like every day I'm coming on going, wow, I haven't seen that in a while, or I haven't seen this in a while. I haven't seen a 1 minute move like we saw in WTI crude today in a very, very long time. Takes me back to Arab Spring back in 2011 when we saw these huge moves, when Gaddafi was killed, when we saw the action in Egypt was a big market mover as well. So absolutely huge stuff going on. I want to start off by sending out thoughts and prayers and best wishes to everybody in the region that's being slammed by Hurricane Helene. The flooding down there has been absolutely ridiculous, and this will continue to develop into one of the biggest disasters in U.S. history. As of right now, it's 200 dead, but they know the waters are still going down, and there's going to be a tremendous number of people that they find. The reason why that I bring it up is we do have watchers. We do have clients in that region, and you know who you are, so I wish you all the best, especially in that Florida area and also up into Georgia, North Carolina, and East Tennessee. It's been an absolute mess. The government needs to get down there and try to help as best they can. Their response has been a disgrace right now. As of right now, just like it was with the Maui fire. Get your ducks in a row and get the job done. That's all I'm going to say about it. But we have a lot to cover today, and the first thing we're going to do is we're going to get a trade follow-up, big-time trade follow-up today. I put this one out a little while ago. If you just got the brief, you got to check that analysis thread. Sometimes these trades go and they go right away. This was a banger. We absolutely nailed this trade, so I'm going to go over it here in just a second. Let's see right here. Bobby Bob, good to see you. Ready for the webinar? All right, let's get it on. Mark Corp, good to see you. Mark, trying my first WTI trade. Looks good so far. It's already won. This thing, the one that I put out, it's already a W. So we're going to go over it here in a second. Dibble, good to see you, Dibble. All right, everybody. The trade was very, very simple. We saw an epic breakout in WTI crude oil. There was a lot of reasons for it. I'm going to hit those in a second. But first, let's unpack the trade. The trade was relatively simple. It was a 72.75 buy, which was just above that monthly retracement zone. Essentially, my read on this market's very easy for U.S. oil. We're going to be bullish above 72.60, and then we're going to be bearish below. But for right this minute, we have an explosive situation that could send crude oil. I saw an analyst this morning saying it could go to $200 a barrel. I'm not buying that even a little bit, but the explosive nature and the way that the bids hit the market at 8:15 my time, 10:15 a.m. Eastern, or 10:13 a.m. Eastern, was absolutely astonishing. I don't know, I'll get into the psychology of a trade like that, but it was one of those that you wish you could get in on it, but you can't pay your bills with wishes. You got to have a structured approach, and I think that we did the right thing. We hung back. We let the move develop. We got our levels down, and then we entered. So right there, that was a 72.75 bid, and we were looking for 73 and a quarter, and we got it. We got it relatively easily right here. That trade hit the news wires right in here. I think I put it out. I mean, look at the exact time if you want. I think it's on GMT, but this right here was our entry. Nice big sell-off right down there beneath 72.75. What did we get? 72.66, right above that long-term level. And our take profit was just a modest 50 pips, 73.25. So the first criticism I'll get for this trade is, Shane, why didn't you take more? Why isn't this a 1 to 2, 1 to 3, 1 to 4? We want to get rich. And I say, yeah, I want to get rich too. And I had one on the board for gold that I felt very confident was going to pay me a lot of money today, and it just didn't develop. So when we get into these trades, be consistent with what you do. It was one of the biggest criticisms of the 9 EMA. I'm going to go over that trade that we outlined yesterday here in a second. Was that you can't make any money with a 1-to-1 ratio. You can't do this, you can't do that. And I said, yeah, you can. And I'm going to show you exactly how. In any case, that was a nice 50 pip clean. I loved it. I thought that was a relatively simple trade. There was really no ifs, ands, or buts. That was relatively simple to hit. If in fact you had a big bid-ask spread trading U.S. oil, which you should not have had today because there is that much volume in the market. With that kind of volume, you should have a very tight spread and a very efficient market because everybody's trading it. We call that market depth. You want to trade everything that has good market depth. Now, just to unpack U.S. oil a little bit further, I gave just a host of numbers in that trade write-up. If you missed it, be sure to check it out because, trading it is one thing. We got in, we got out, we got the job done, but it's important to understand that we're not done yet. We're not done yet. You've got an epic month right now shaping up of about 8%, and we're only 3 days in. All right, the geopolitical situation is what's really driving this, and right now this is it. I mean, it's Israel during the U.S. overnight hit Syria, hit Russian installations in Syria. So then all of a sudden we have Russian involvement. We're talking World War now. I'm not going to just leave it right there. As we're thinking as traders, we're not going to get our emotions involved. We're not going to call out the federal government like I just did for the hurricane response. We're going to be rational about this. We're going to say, okay, first of all, thoughts and prayers to everybody in the region, everybody involved. You don't want to see anybody die, but you have to understand that this situation is the number one market driver. Now, I know we have NFP tomorrow, and I'm going to go through some traditional fundamentals, and we're going to set the table. We're going to get you lined up and ready to trade U.S. employment, but we also have to step outside of our financial world for a minute and say, hey, whoa, what's really going to drive the markets? This escalation. We talked about war escalation. We put out a Q4 oil call that looks like it's absolutely spot on. We're seeing a lot of reasons to believe that oil's going way, way up. We just have to wait and see exactly what develops. You know, if I'm trading right now, I'm long crude oil. I'm not short. And that bucks traditional fall seasonality. Remember, we start selling crude oil in the fall. All bets are off now. We start destroying, or if we start seeing the destruction of Iranian oil fields, if we start seeing Russia, maybe Russia moves military assets into the region, maybe more than they already have in Syria, that's an issue. So there's a lot going on here, guys, and it all points to escalation. And escalation means what for WTI crude oil? Well, it means it means that we're going up. So 3 days, you got about an 8% rally. Okay, that's fine and dandy. But take a look at what we got coming up. 50% retracement. I don't trade that one. Right around 74.89 though. I would make an exception in this case if I was a U.S. oil trader, which I am not. I trade WTI futures, but that's okay. Right now, it's the same price. These numbers are different for the CFD. This represents a WTI continuation futures contract. And if you don't know what that is, don't worry. There's no quiz later. Continuation contract is just when they adjust all the prices and they string it into one continual contract as opposed to having to roll over all the time. It really represents your U.S. oil, CFD. The idea is being they want people trading where they don't have to roll over. I don't trade continuation contracts. I trade front month, but that's a long conversation for a different time. But what I will say is this nice big move, this 50% level, I'm not a 50% trader. I will throw rocks at 50% all day long. I don't want any part of it. But 75 is huge. Why? It's a big round number. We put a key levels video out a while ago, and really nobody watched it. It talks about key numbers and understanding what natural areas of support and resistance are. That's absolutely huge, absolutely huge. So I'm looking to sell right there beneath 75. I have no problem doing that. And then up above here, we got a couple other levels. My 13-month EMA, huge level, 76.35. Excuse me. Let me see. No, excuse me, 78. No, 76.35 right here is your EMA. And then your 62%, the back end of that golden zone's at 77.16. That's huge. That's a big zone. That area right up there is going to be robust resistance, no question in my mind. Now, if something really huge happens, if you do see World War and all of a sudden all Russian exports are shut down, you see destruction of Iranian oil fields, then we need to really start talking about how high this thing goes. Analysts today were saying that, well, I mean, it's the guy was just trying to get headlines, but he was on CNBC, and he was saying, 200, somewhere up in here. I went, come on, really? 200 right away? That's not going to happen. You're going to see probably a test of 100. Look at what you've got on the monthly. Be very careful with this. Huge uptrend from those COVID lows. We based out right here. It looks like we based for a while, intermediate term bottom. Look for a big rally. The reason why we're spending so much time on oil is because there's not much else going on. Equities are starting to slide a bit, but, that's the game. So if you do see a major headline that comes out of that region, first port of call probably will be 100 if it's a major one. And then after that, you'll get some compression at 100. If we break above these highs here, which are right up around 109 or something like this, what is this, 129? Those aren't all-time highs, by the way. You think they are. They're not. They're not all-time highs. Be ready. I was there for June of 2008. That on its own really worked to crash financial institutions as well. Watch the energy markets. It's going to tell you a lot about the broader market sentiment. Gave you the trading levels. Check out the trade idea. But that was a pretty good trade. If I'm trading crude oil, I want to be long. I don't want to be short. No two ways about that. Okay, our economic calendar for today, I've got a whole bunch of events that we're going to go over here. We're just going to touch on a lot of them. The biggest one that we want to remember is we're going to go ahead and get involved with that NFP, unpacking NFP tomorrow. I think that's absolutely huge. As far as what we can expect for tomorrow's session, NFP Live is going to be an epic event. I'm going to preview that before we sign off here today because it's important to understand exactly where our expectations are and what we can do. I'll be back on tomorrow morning early in my neck of the woods at about 6:20 a.m. Eastern. So wherever you are, morning, noon, or night, be sure to check us out. We'll have the event as it unfolds, and we'll also have a few trade ideas for you and really look to capitalize and cash in on that employment data. I think we're going to do a pretty good job with it. Before we get on to our economic calendar and our fundamentals, though, I do want to sort of touch on this 9 EMA. Now, I get a lot of questions about, oh, Shane, why are you covering the 9 EMA so much? Well, we put a YouTube video out that a lot of people saw, and it was received very well. And I wanted to start covering the strategy a little bit because a lot of those folks are sort of driven to how to trade, and they're watching the live stream because of that video. And full disclosure, the 9 EMA is not my strategy of choice. It isn't. I'm a Fibonacci trader. I just showed you what I do. But it can be very good, and I've got good feedback. I've got a lot of folks that are questioning the strategy, and that's great. I love questions. Questions are fantastic. We had sort of a trade set up yesterday on this NQ, this E-mini NASDAQ futures, and right there was our sell bar. You guys remember that. When we sold it, we watched this thing sort of mill around, and we were in the positive. Then we broke above the moving average, and we sort of crept for a while. And then you saw the big sweep right in here yesterday evening, sort of on the Tokyo Open. And then we really started coming off, and we went down and got a pretty good move out of it. Now, if you remember, one of the biggest parts of any trade is putting in your stop loss and your profit targets. That's the number one thing. I hear it from traders every single day. Okay, Shane, I'm having trouble staying in the markets. I'm letting the markets go, and I'm cutting my winners off. I'm letting my losers run. There's one foolproof way to get away from that. And is it the best way to trade? I do it. You define your stop loss before you trade. You execute your trade, and your profit target's already down. And then what happens? You just let this thing play out. Me, I love one-to-ones. That's my bread and butter. I will argue with anybody till the end of time that one-to-one ratios, if you're making as much money on your trades as you're losing and you're winning above 50%, you have an edge. You have a palpable edge. That's huge. If you can define your edge, then making money is just a matter of time. Then we just get as much money as we can from prop firms, or we save up our piggy bank and we sell our car and house, and then we just start rolling that money over. Okay? Now, when we get into this argument, it's always the same. The analysts, the economists, the traders, the market pros laugh at me and they say, Shane, you can't get on the right side of the market enough to make this profitable. You need to be in there on winners. Your winners have to make a fortune to cover all your losers. And I say, not so fast. If I know where my stop loss needs to be, and I know I have a good expectation of where price is going to go, and it's a conservative profit target, meaning the market really doesn't have to do much at all to pay me off, and my entries are good, I have a winner. I have a winner on my hands. Now, this, believe it or not, most people are going to poo-poo it and say this was a horrible trade and it was a loser. No, it wasn't. Go back and check out yesterday's stream. We had a stop loss right above that previous swing high, right above that daily high. There was our sell. We sold when we broke beneath the EMA, and then we just basically just took pain and heat the rest of the U.S. session. And then what happens? We roll into the next session, and we come off beautifully, and it pays us off. Was it a day trade? No. Was it a pretty good overnight trade, swing trade? Yeah, it was pretty good. It's not bad. So that trade right there on a 1-to-1 paid me off. Now, if it's a 1-to-2, what happens? We sort of run into a buzzsaw here. We had that epic news that came out of the White House, and we'll talk about that in a second as well, that drove the crude oil market absolutely crazy. The same thing happened to equities. We saw this big spike in equities, and that would have happened. Wiped us out, and now what? Now we're back into the money, but what happened? We're stopped out first. So bottom line is my 1-to-1, a 1-to-2, or a 1-to-3, or 1-to-4 cost you money. As long as your leverage is okay and you're not betting any more than 1 to 3% of your account balance on the trade, then you've got a chance to win. Now, like I said, full disclosure, I'm not a master 9 EMA trader, but I understand trading and I use moving averages, and that's how I would trade them. Now, you could have also, just before I shouldn't have taken everything off, you could have also sold here, and when you got the next bar across above and close above the EMA, you could have got out right there. You could have cut your loss way down. Now, the problem with that is it gets mentally exhausting because what happened? You get out, and then we mill around, and then, of course, it goes down and gets you paid. That's hard. That's something that's very difficult to deal with. So I say be consistent. If you want to use the previous swing high and swing low and depend on that market structure and the follow-through of the said market to get you paid, use the 9 EMA as an entry point, do it. Do some back testing. Check it out. See how you want to trade it. But if you want to cut it off and say, listen, I'm not interested in being anywhere around. If we break beneath and we get a bar close above that, I'm out. I don't have a problem with that either. The thing you have to do is be consistent. You can't just let one run. Okay, I'm going to put it above the swing high and see how this goes. And then, okay, I'm going to cut this one off and see how this goes. You can't do that. Figure one out. Do some back testing. Whatever best suited for you and your capital constraints and your goals, and then stick to it. After a period of time, if it does not work, switch it up. Say, okay, I'm playing way too tight. I've got stopped out of way too many winners here. I've got to make sure that I just move my stop. That's all there is to it, guys. That's trading. Now, if you were looking at this NQ today, and remember, we were starting right there in the U.S. session, right there, bottom line, ding, ding. You would have bought right there. Okay, that would have been your break above this EMA. You would have got the break. You would have got a pretty good payoff right there. Where would your stop have been? Okay, going into this, there's a couple places to put it. Personally, I would have put it right there. You say, well, Shane, the bar's still forming. And I said, no, it wouldn't have been. That would have been your new swing low. Well, how can you say that? That's the opening 30 minutes of trade. Opening 30 minutes, we broke above the EMA. Boom, I'm long. Where's my stop loss at? Beneath that low. And I'd say, okay, where would I have got long at? Right up there, my close was at 20.23. Where's my stop down there? My low down there is at 19.894. 23 and 94, what, 6? So what are we looking at? 39 points? Something like that. 39 points up above 23 is going to be, what, 62? Something like this. Somewhere in there. It's a winner. So I always get this. I get this a lot. Actually, it's right up here. It's got to be a little bit higher. It's somewhere right in there, but it is a winner. Boom, 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 1-to-1. Be careful with what you do here. I won't tell anybody how to trade. One of the things that I would say, though, is be consistent with what you do. If, in fact, you got out or maybe you got stopped out here, what's the rule now? You're going to want to sell it right now. Can we do it? Sure, we can do it. Do we want to do it? I don't know. Why not? That's what the strategy says. Let's go ahead and sell it. That's our trade. Why is that our trade? Because we've got the break beneath the 9 EMA. If we pull back, maybe that's a better entry from the 9 EMA itself. Where's our stop loss at? Stop loss is going to be right above that swing high, or you could stop yourself out when you close above that 9 EMA. Your call. For me, I'm going to go ahead and try to get a 1-to-1 ratio here. Whatever I'm risking here. What are we short from 19.18 or 19.918? 2062, one is 140. I'm not going to do the math, but it's down here somewhere. Reason why I'm trading this time frame, 30-minute chart gives me enough time to see price action, and also during the U.S. session, we're bound to get a move. That's what you got to do when you're trading EMAs. You got to understand when's the market likely to move. It's going to move when there's volume involved, and when potentially the market can pick a direction according to public sentiment. Okay, I wanted to cover that. So break a close. Gaming Chronicle, good to see you. Break a close. I don't follow you, Gaming. Can you rephrase your question? I'm more than happy to answer. I'm not dodging it. Let's see right here. Mark Corp. I'm interested to see how often the 920 EMAs cross at important fib levels. Feels like extra confirmation. Well, I'm just telling you, from a 9 EMA, this is the most basic strategy for the 9 EMA there is. I'm just trading conventional. We're just trading breaks above and below it. And that's why most people don't like it. And personally, I think it's a little bit sketchy going that easy. But if I was looking to do something like this, I love the break. Where are we at with regards to today's low? You know what I mean? Down there, that's going to be your daily low. So if we're going to get a trend day down, we're going to have to break that low. Do I want to sell right there on that close? You could. If you're going to put a stop loss up there, you could. You could get a better entry, though. I could sell 38%. See what I'm saying? I could sell the EMA itself. I would wait for a retracement. Waiting is almost always the right answer. Almost always. Let me see right here. Day trading 0 to hero. Why not secure a partially and leave a runner? Absolutely, day trader. Day trading 0. Absolutely. You could easily especially with this with futures contracts. You could easily put on. You could put this short on right here, and I could say, okay, what do I got here? I got 4 short. I'm rocking 4 contracts short. I could put 2 out there at a 1-to-1 ratio, and I could move the other ones to break even and just let that thing run. Because when I hit a big trend, I'm going to be making a lot of money, especially if I get in on a trend day. Now, what I would recommend, and this is the question that I've had for a decade, and I've talked to a lot of different traders that do it a lot of different ways. The way that I finally figured out I needed to trade was I had to get away from giving money back to the market. Meaning, if I do leave a runner on, and let's say it goes 100 points in my favor, and let's say I've got a couple contracts and I'm up a couple grand, I was having a real mental problem giving that money back. I always thought, well, just take the money. I mean, it's a big move. Take the money off and let's go do something else. So in order to mitigate that, I load up my leverage up front and I take 1-to-1s. But that's just my style. If you want to leave a runner on, 100% leave a runner on. That way, if you get into a big trade or a big trend, you get paid. And is it possible today to get in on a big trend on the NQ? Absolutely. If we start seeing more, if we see any more of this type of stuff, if we see an escalation, somebody gets involved, you'll see the markets crash. Realistically, you will. But the real question is how low does this market go? Nobody knows. And that's really the issue here. So that absolutely is a good. Let me see. So that's day trading. Enter. See Gaming Chronicle. Enter when it breaks below, or enter when the candle closes. You can do that. No, on the close. Conventional 9 EMA. You're going to do that with a close, something like that. So if we wanted to do a 920 here, we're not going to get into that right now. We got a lot left to cover, but we'll let this simmer. I'm sort of watching this. This could easily draw back up into these guts though, and we could be sitting here for a while. Is it a good trade? Is it a bad trade? I don't know. Let's see what happens. All right, everybody. There is a lot going on in the markets today, though. We want to make sure that we cover as much of it as we can here during this session. If you're trading gold, all-time high, be ready for that. Also, pullback buys from 26. You're not going to get them today ahead of NFP, but definitely have that area, that 2605, 2607. Write that down going into NFP tomorrow. That's absolutely huge that we understand that. Natural resistance is up at 2750. I think it's a matter of time before we get there. So is there any movement really on the gold front? Not really. Nice big run. A little bit of a retracement there on that daily. You remember we crushed that daily. Daily Fibonacci right there. Spike low to a spike high. That was a beautiful thing. Crushed that. Almost got a shot at it again. Well, maybe you guys may have. Low was 38. I was a little. It wasn't quite low enough for me, for my blood. But look what you have happening here. You got hammers. You got back-to-back hammers. What do hammers suggest? Pricing exhaustion. Do we have a market driver that could send this thing higher? We sure do. We sure do. And that's US NFP coming up tomorrow. So clearly geopolitics is running the roost here. If you get a big event out of the Middle East, you're going to see a big-time rally in gold. If you don't, well, you're probably going to see more of this stagnation right now. But for right now, the gold market is quiet. It's very, very quiet. And it's one of those that I would keep a close eye on. Get ready for a break, though. I'm prepared for a break. I'm bidding. I want to make my mistakes to the long. I don't want to be short. I really wouldn't consider taking a short position until we see some exhaustion up here around 2750, and then we can do it. I can justify that. I can live with myself if I lose from there. One last thing I want to point out here, and we're sort of getting ahead of ourselves. There's going to be a video coming out tomorrow that's going to drop. It's called Beat the Market Maker Strategy. One of the Beat the Market Maker strategies that I have in there is called a failed auction. This low right here, take a look at this daily low. Daily low's at 26.41 Take a look at this daily low, 26.38.56. What does that mean? It means that as soon as price broke beneath yesterday's low, there was bidders there. Now, why would I say that? Because everybody in the world can see daily highs and daily lows. Institutions line up, and they either drive the market lower from there or they drive it higher. And what happens is you get a flood of action. We saw some sellers beneath there. We saw a lot of the long stops get wiped out from retail. And then what happened? Institutions drove it. They stepped in and they said, okay, we failed down there. The market couldn't go any lower, couldn't extend beneath yesterday's low, and the bidders stepped in and drove price in the different direction. That's called a failed auction. It's a pretty darn, it's not an according to Hoyle beat the market maker strategy. That's someone else's work. That's their strategy. But the same principles apply to a failed auction. Institutions stepped in, price fizzled, you got a reversal on your hands. I cover that in the video, so be sure to check it out. Let me see, day trading to zero or power hour. We could see some volume in power hour. Absolutely. Yesterday's power hour was a disgrace. It was very slow. I sat here the entire trading day. Usually, if I don't have enough ticks racked by power hour, I kick off. But in any case, that's what I'm looking at for gold. As far as an intraday program, I just don't see anything. I really don't. Here's a nice 4-hour break, I guess, if you wanted to trade. Right now you could do something like this. This is a nice, sort of an uptrend. For me, I'm not interested at all. If you wanted to scalp from the short, maybe you could, but you got to see a swing high set up. If you want the bid right now, 2650, 681, 2657-ish, you could do something like that. I like to be bullish gold, but this is really compressed. And with NFP coming up, it's not necessarily the best time to be doing this. Got a few fundamentals, and then we got a couple more markets that we'll close with today. Right here, the news of the day, continuing jobless claims we don't care about. Initial jobless claims is what we do care about. 225,000, that's above the 222 expected. That's a big number. That's huge. That means that unemployment's ticking higher. S&P Global PMI, all these PMI numbers were roughly in line. Don't get carried away with any of those. They're just not that important. Tomorrow is important. U.S. non-farm payrolls. What do you got for non-farm payrolls? You've got average hourly earnings. You've got government payrolls, manufacturing payrolls, non-farm payrolls, NFP. We're expecting this to come in right around 148. Okay, that's up from last time. We have no idea what these numbers are. Do not put any stock in the actual fundamental numbers tomorrow. Believe me, they will be revised. I'm looking for another big downward revision of the previous release. I think that we could miss expectations. This close to a U.S. election, this is a U.S. government bureau reporting these numbers. I don't believe them. I don't believe a word that comes out of there with regards to the job situation. But here's how we can trade it. Understand the market expectations. Doesn't matter what we believe. Expectations, we expect non-farm payrolls to tick higher. That means that we're supposed to see more jobs being created in the last month. I'm waiting for revisions. I'm going to cover this during the sort of the lead up to our event tomorrow. We're looking right there about 10 minutes before the number drops. We'll have all the action for you. Participation rate, don't care at all about that. Unemployment rate is what I do care about. This is the political football. 4.2% previously. We're expecting 4.2% to be the unemployment rate. Now, right here, good look at your non-farm payrolls. Bang, bang, bang. We're down. And that's why the Fed's cutting interest rates, because they're scared. They're scared that we're going to go into a recession here in the United States. The unemployment rate, this right here, is the other reason that it's such a political football. When unemployment rises, people get thrown out of power. That's what happens, and this is an election year. You'll notice right here, this is an all-time look at this unemployment rate, and what do you got? We're historically low, and that's why the Fed believes we're in a pretty good place financially. Economically, they believe the economy's strong because unemployment is still relatively low compared to where it's been. Throw that spike out. Those are COVID. A lot of folks just took the money and just didn't want to go back to work, and a lot of folks got sick, and it wasn't a good situation. So that's a complete outlier, black swan. Throw that spike away. This was a real one. This one back in 2009 and 10, I lived that one. That was horrible. And then right after 2000, 9/11, that really brought about a big uptick. And then you saw sort of the historic rise in unemployment. This was almost a major depression in the early 1980s, and it took some major work to get out of that. So this is what we're looking at for tomorrow. Remember, higher unemployment rates typically lead to lower interest rates, and that's what we're going to be feeling. That's what we're going to be feeling. I'm going to be looking at that tomorrow. So just stay tuned. I'm going to unpack all that for you tomorrow along with the key levels, and then we're going to scalp this thing right after the release. In any case, right here, Euro USD, monthly chart. I'm looking at 109.80 buys. I think that's a pretty darn good level. That's about 50 pips down. I got my eye on that going into NFP. That's huge. If we do see a major sell-off, right now the dollar's up about 0.25%. If you see a major sell-off, the other entry would be 108.35, which would be on the back end of the golden zone. This trade right here would be probably a 109.90 buy, something like that. And I'd be stopping myself out underneath 50. It would be a very tight trade. I want to see price hit that and stop. If it doesn't, then we could be in for a deeper correction. I love my monthlies, though. I think they're pretty good time period to trade. As far as your daily goes, now I just gave you an opportunity here to buy it. What about sell it? We got pretty good price action, pretty good structure here in the Euro USD. Something like this. Why not? 110.84. I got no problem stepping up and trying to scalp that for 25 pips to the downside. It's not a bad entry at all. I could sell 83s. I could sell 79s. Stop myself out up over right up over 111. Maybe put it somewhere up at 111.09. Look to get that 25 pips. That may not be a bad way to trade it. All right, let's go ahead and check on our NQ. Once again, we're in the hole. That retracement went just about perfect for me. You could have sold up here at 38%. You could have sold 62% in concert with the 9 EMA. I like that. That's a much stronger trade than just selling on the close. But I was just presenting you the strategy. You got to make a decision how you want to trade it. It's not a cop-out. It's the truth. Pick something that you believe in, stay consistent with it, and you can make some money. Last thing I'm going to show you here is WTI crude oil. This is sort of what I was dealing with this morning, and this was my world. 1 minute chart. Forget all the lines. Don't worry about it. That's a pretty darn good sell-off right there. Fantastic. Look at this bar right there. 2%, 2.25%. Look at our traded volumes. 11,500. That's a 1 minute chart. Those type of scenarios are disasters. They're bank account killers. It'll absolutely just break you out and blow you out. That's a huge move. Haven't seen one like that in a long time. In a very long time. Why did that happen? Because Biden was talking with Israel about the potential of bombing the Iranian oil installations. 100%. That's why that happened. Nobody knew that story was going to drop except the people that dropped the story and the people that were in the room. All right, let me see. Gaming Chronicler, very good trend rider trade setting up on the Euro USD and the USD JPY. Admittedly, Connor's the expert in the trend rider. Feel free to ask him. Actually, he's going to be out on holiday here for a few days, so I'm going to be covering. I'm going to be doing double duty. You'll have to ask me. I'm not up on the trend rider strategy too much, but if you do have those setups, stay consistent with the rules and rock them. Get after it. All right, guys, we're going to get after it early tomorrow morning with NFP Live. Keep a close eye on your news cycle. You've got to remember that situation in the Middle East is the number one market driver. NFP tomorrow is going to drive everything which way but loose. And once again, our thoughts and prayers are with everybody in the hurricane-affected region. From everything I've seen, it's incredibly just a disaster zone. Do your best. Do your best. Things will improve. Things will get better. It's just going to take some time. Thoughts and prayers, and we're sending all the help we can. The people are. The government needs to get the tail in gear, though. That's a fact. All right, everybody. Trade the action well, and we'll talk soon. See ya.